Well, hello, folks. I'm L.A. Little, and this is your daily Neo-TA wrap, where we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time and archived on YouTube, as well as on the site. At least on the site for a short period of time on YouTube indefinitely. You can catch it on YouTube. L.A. Little is the channel. You can subscribe to it and get notified each time it's posted. Makes it easy. As far as what happened today, I got a full slate today, so let us pop in here and try to get going. We actually had, pretty good push higher today. Percentage-wise, NDX comp was next. So you had a 1.1% move. Big piece of that early was Amazon. Amazon coming out with a card, reader. They're trying to push into another sector. Those guys don't quit. They get all that cash from Wall Street, and they keep pushing it out into different areas. They don't make any money, but it's over a decade they hadn't made any money, and nobody seems to care. So I guess as long as they're going to give you money, you just keep spending it. Composite up 1%, pretty broad move there. Russell was next, about 0.75%. Then S&P, and then the Dow was a laggard, up a little less than 0.5%. Bonds up again today. Bonds up 0.65. They're going back after the highs. The bond buying hasn't quit, and the volumes, everything still looks to the upside. If you look at it on the weekly, it still looks like it wants to go topside. Gold holding. It looks to me like it's trying to build to break higher. The gold stocks definitely say that, and if you haven't checked it out, you ought to pop over and check out the gold stock video that I did today here on the front page. Dollar slightly higher, and elsewhere not much going on. UNL pulls back. One interesting kind of a note here is that even though gold looks like it's trying to break higher, silver just can't get moving, and that's quite a divergence. I don't know which way that's going to resolve. I'd like to think it's because silver is more tied to the economy, but I don't know if that's the case. And another idea, if you want, is to, if you look here at the pulse of the economic activity starting to look a little less healthy. I did a piece there to try to show some correlation. One of the early correlations that I looked at that told me things were getting stronger about 2 years ago. So that might be a video you want to check out as well. They're short ones, 1-2 minutes. You can get in and out of them pretty quickly. That's the data last night. We were talking about these markets. We're going to try to move higher, and higher they did. And so now the question, of course, is what do you do once you do it? Let's pop over and look at the charts and see what we got here. So if I switch over to the S&P 500, we've actually got a nice little ABCD structure that formed today to the upside. So you got a bullish ABCD structure wanting to take you right up to that breakdown bar's high. That's where it measures to. The thing that was most important today really wasn't this, though. What was important is that you got back over this zone that you've been fighting. You got back over this zone, you stayed over it. That, it's not really a retest, regenerate, so to speak, because it's already been up there. This is the second time it tried, or actually the third. It's more of a resistance zone. That resistance zone was here. They plow through that. They get a gap up today, and they just keep going. So now the question is, how high can it go? Is it going to finish off that ABCD structure that just showed up? We do know at this point, given the way this has traded, that this has indeed become a range trade. You've got this large range. Inside that large range, you've kind of got 2 ranges going on. I drew that a little bit big, but we'll just leave it at that. You kind of got 2 ranges going on. You're coming up into the top of the lower range. That is going to be the resistance on the way back up. What we do have, though, or what we do know at this point, is this thing is going to trade sideways. We suspected that because it did not hold and retest, regenerate lower off that bearish retest regen zone. Now you take out another swing point high, swing point lows high, which kind of confirms the fact that more than likely this thing is going to trade in ranges now, not up not down. So I would be looking to see how those ranges trade and how it ends up going as it comes back up. In other words, can it push all the way up there and just do it straight off, or are we going to get a fall back here just like we saw? And I'll remind you, we had a bearish ABCD structure here, and what happened to it? Well, it didn't get down here where it was supposed to go. Turned around, and now you've set up the ABCD the other way. Now this one probably has a little better probability because it's not as stretched, and you've had a bullish market for a very long time. So, I would give more credence to this one than that one, in terms of finishing. But all I'm suggesting here is, hey, you've had this one fail. You may have this one fail as well. The bearish one failed. You may have the bullish one fail as well. And even if it does get up here, you're still in this sideways trend. But that is a long way to travel. So, you got another 20 points. You can go to the upside here, if in fact it does it, right? Dow Jones, let's pop over and look at that one. So the Dow's got the same thing, ABCD structure up. It measures about 300 points off the C point. That takes it up to about 1683, which would be shy of the top of the breakdown bar. Also, this actually has two things that are divergent within itself. A lot of times we talk about divergence between other things. Well, here you actually have divergence inside the same chart, and that is that you're coming back in now to a retest, regenerate zone that's bearish. Going to try to push it back down. We'll see if it does. But you have kind of a divergent picture within the same index, within the same structure. So that's the Dow. If we look at the Nasdaq pushes back up. Now here you had a retest, regenerate, and they all did. Had a retest, regenerate zone right there. What does it do? It does a full retest, and now the question is, will it regenerate? So you're all the way back up to where you should regenerate lower if you're going to. This one hasn't told us at this point if it's going to fail here or not. What we do know so far is that it did not regenerate off the first one. We got over that high today, and now we're into the second one, and we're also at the breakdown bar's top, at least not counting the gap, right? So at this point, we know it's probably a sideways trade because we did not regenerate off of this retest, regenerate that was bearish. Question is how far is the sideways going to go? Does it go all the way to the top, or does it play in the lower half? And right now it's trying to break to the top half. This will be a key index tomorrow. If you look at the NDX itself actually got over the retest regenerate zone. That zone's top is 39.42. You got the 39.49, close at 49. That one also now has told us sideways trend. And so how many times do we have to be told sideways trend? And that's kind of what we thought was going to happen once we started seeing these break. That is in fact what has happened. And now this one is actually trying to push up into the higher zone. The real test here tomorrow will be, of course, what does it do with that high? That top 39.4890, it's just barely over it. We'll see if it can get up in and close the gap. It's going to try, but that will be the test tomorrow. So the real test, just like it was today, we talked about last night, today the test would be the Nasdaq, the NDX. Well, here you go. Those guys lead the market higher. And if you looked at this market this morning, if you look at it intraday, and I'll pull up an intraday chart for grins, and let me pull the S&P up, intraday, put it on 1 day, and matter of fact, let's do it a different way. I'm going to overlay it with a comparison chart of the NDX. And the reason for this is you're going to see the NDX was carrying this thing all day. So the NDX early this morning, I'm going to pull this back to here. Early this morning, the NDX was the one that started climbing, and it pulled this along with it. And you can see how this made a lower low. And if you're looking intraday and you're looking for things to trade off of, a lot of times folks trade off a divergence. I do too. Well, the divergence here was stark, not even close. You can see the NDX in blue was pulling everything higher today. S&P tried to make new lows, but when this one started to move back up, it just drug it right up with it, and that's what happened the rest of the day. So you can see where the strength was today looking at that type of a chart. And if you were watching it today, you saw it. Matter of fact, I called it out in the traders room early this morning to all of the members and let them know that that's what was taking place. As far as the other market that's left, let's look at the Russell right quick. On the Russell here, now it was leading all the way up, spiked up, tested, failed, came back. It too is trying to set up an ABCD structure to the upside. Its real test is going to be off of this regenerate zone. Actually, it's not even a regenerate zone, it's just a resistance zone at this point. It's going to be off of this area, so the test will be here again. If it gets over it, well, the picture really changes, but even at this point, we know that this one has already told us from this lower level that it wants to trade higher. It got over it, right? Did not regenerate lower. That was the first clue. Well, it wasn't the first, but that was one of the clues of all these telling us that this market is going to trade sideways and it's not going to trade lower at this particular point in time. And so, you know, once you know that, and once you know it's a sideways trend, then you want to try to trade the ranges versus direction. All right. I flipped through most of the sectors myself. I flipped through most of the indexes, world markets, flipped through, of course, the OX markets. Most of the sectors still trying to regenerate lower on bearish retest regens. You got a couple of them that have gone sideways at this point. World markets, you've got extreme strength still in Asia's Hong Kong and the Hang Seng. And then also in the Shanghai shares that trade on the Hong Kong market. So that's what's happening in Asia. In the rest of Asia, it's just kind of getting pulled along by those strong ones. South America, Brazil looks like it's about to break down again. If we looked over in Europe, Europe got a little bounce, but it's not much compared to what's happened to it. So when I look at all those things, it looks to me like this market's probably going to trade in a range. Surprise, surprise, that's what the indexes are telling us. Question, of course, is how far does it bounce? We got mixed signals tonight, and so you can't really make a straight out call tonight about which direction it's going to head, but it does look to me like you're probably going to trade sideways, maybe slightly higher, slightly lower, but nothing big tomorrow either direction, more than likely, is the way it looks to me. The caveat to all of that, of course, is if the news flow really starts up. Remember, we've had a dearth of news here the first 3 days. We've got that convoy sitting over there. I haven't seen what happened this afternoon with it in Russia going to the Ukrainian border. That's going to put pressure, and we're going to have to see how that resolves itself. If the news flow turns negative, then necessarily you're going to see the markets probably fade off of that. I got a lot of emails, questions sent to me. I don't know that I'm going to be able to get to all of them. But just a reminder for anybody that hasn't or has and still needs a reminder, or you can always text me 303-912-9110 during the show or after, before. It doesn't matter. I'll pick it up and I'll try to do whatever it is that you're asking me to take a look at. support@tatoday.com. You can email me there. Of course, you can type into the live stream window, send me questions there. Let's pop into some of these as the second half of the show here. Let's pop into some of these stocks that folks are asking me about. And I do ask you, if you ask me a question, do me the courtesy of telling me what direction you're trading it and what time frame, because that makes a big difference as to what we do or don't do in terms of how we analyze it. So let me take a look right quick at some of these questions that came up. I'm going to start with you know, the earliest ones I got, and then fade back to the latest ones, because I might not get through them all. I got about 7 or 8 of them here, it looks like. Facebook was the first question. So Facebook, gentleman wants to go long on this thing. He wants to go long both on a trading basis and a core basis. And that makes sense because this stock, let me pull all the charts over so we can get them all in here together. This stock has been bullish for quite a while. So if you're going to trade a stock that's been bullish and you're going to trade it on multiple time frames, that's an ideal way to trade it. So let's start with the longest term time frame. You can see the nice big push up. Once it broke over the swing point high, pushes up, had an ABCD structure in place that never finished. I can do a quick number here, 2267. It's about 30. It's about 27 more. Onto that gets you to about what, 89, and we're not quite there. So it takes you almost to 90. If you look at the weekly, this thing broke over a swing point high, broke over it with volume. That was on earnings. So that's a volume breakout on earnings. Not only on that time frame, but on this time frame as well. You had a breakout just a little bit earlier than the earnings breakout. All of that suggested that this thing would hold and would try to move higher. Of course, where's the buy? Well, right into a close of the gap would have been the buy. You see the support zone there. That's the ideal place. If this market trades sideways, I would not be surprised to see it come back into that area again. This is the range it's trading in now. Now, it could come back. It hasn't done it yet, but it could come all the way back and do a retest regen off that prior swing point high. And let me make certain of that, but I'm pretty sure it didn't do it. 68.44 and did not. So it hasn't done a retest regen. If it came back to here, this would be a great buy. So that would be the place that you'd love to pick it up. I don't know that it will. So I would be looking for this low as the price point as close as I could to that low. That price point is 71.55. If I'm in it and I'm trading around it, I would want to be fading it into this high. That's a high volume high. It is going to go back up there and test it at some point. So if you can pick it up here and you pick up maybe a little bit where it is, maybe at the top of this, like where it was this morning on the open, that would be the place to pick up the first piece, the second piece, the big piece down here if it really went against you. But the first and second piece, one is your core, the other one you're flipping into this high. So that's Facebook, and that's my analysis of that one. Another question, this one had to do with GDX, the gold sector. Question on the gold sector was really, is it breaking out? Is it time to get into it? Let me see specifically what was asked. It looks like it's breaking out of a month-long trading range. Yeah, it's about a month and a half at this point, a little over a month, yeah. And the range is even longer on a weekly. Yes, it is. It's much longer. This thing has been going for quite a while, and the weekly actually looks pretty positive to me. I've kept a small position from a lower level, and am I thinking about adding to it? Well, you want to add it on the break of this swing point high, 28.03, that holds, and that's a weekly. So you got to get over 28.03. You'd like to see it do it on volume. It doesn't have to. That area, now, usually you would just look at the swing point, right? And you'd say, okay, I get over it, I'm going to buy it. Well, look at where your resistance zone is. Well, why is it up there? Well, it's anchored off the top of this and the top of this high volume bar. So really, you won't be in the clear until you get over that guy. So that's 28.64. You got 28.03. Somewhere in there, you know, 28.70 or so is really where you'd really like to see it get, because then that gives you a very good chance of getting back to these highs. You got two highs up there. What will happen is you'll get another resistance zone print up in this area. That would be your target. That's on the weekly. If you go back to the daily now, the daily is actually a little bit shorter, 27.52, 27.78. You could take it here, but there's a good probability this thing will just fall back in if it can't break out on the weekly. So if you want to be safe, you got to make it break out here. That would be the key. The other question from the same viewer had to do with cores. Cores got hit on earnings. They actually traded up to about 95 on earnings after hours. But then as they dug through the charts, not the charts, but through the fundamentals, they saw inventories rising. They also saw the gross margins coming down. Everybody cited that. They sold it off, volume expanded. So from that perspective, doghouse, right? You trade down, not good. Now if you turn it to a weekly, And this holder is a long-time holder. He's asking about whether he should, get out of it, stay in it. Look at your weekly test here. That was on 36.3 coming back into 47, and this is still a very bullish chart from a long-term perspective, right? So you've had a long-term run. Now you're coming back into this low. That low 76.15 on a monthly. You're at 75.13, undercut it. It doesn't look to me like you'll have, well, actually you may have the volume on the monthly, but you're certainly not going to have the volume against the bar that's just underneath it, 73. So 73 seems to be the number on the monthly, 76 on the weekly. So I really wouldn't give up on this unless it traded below 73. If you're a longer term holder. If you're short term, you really probably don't, depending on where you bought it, you probably really don't want to see it, start to break down and get down to 73, because that's a big percentage move against you. Right now, I suspect it is going to come back in. I'm going to flip to the daily because you left volume here. I suspect it is going to come back in, especially if this market trades sideways to lower and test that low. And what you really want to do is you want to see it come underneath this thing, get back over it. It's not going to have the volume more than likely. And at that point, then you'd like to see some volume come into this thing, telling you that the larger buyers have decided to start accumulating. You'd like to see some big volume come into this thing on a pop up, and that would give you a good clue the buyers are coming in. Unless you see that, you really don't want to put more money into this. As far as getting out of it, I gave you the numbers. Depends on what your time frame is, because I didn't see that here. But I would, I'd give it a little room. I still like this stock. I actually own it myself still. All right, let's move up to the others. We got a question on, let's see, Celgene. Let's take a look at how this looks. So this is a sideways trend. Look at the weekly. Sorry, get a drink there. Okay, on a weekly basis, what do we got here? Not much telling me there, and you had a big pop up. Okay, so what this is doing is a retest, regenerate that's bullish. It's coming back into the swing point high, right? It's testing in that area. Because you came back in within 6 bars, and it's been testing the whole way here. Because you came back within 6 bars, that means you can get to the bottom of this guy. And it looks to me like it's all the way down into that area that you could test into. So risk on this is back to the 80, right? This bar, the bottom of this bar, and that price point is 79.42. That's on an intermediate term time frame, and if you look at the daily, it's also going to be on the daily as well. You can see it gets you all the way back down into here. Here was your breakout point. So on the daily, your real heavy support is going to be down in here, which almost aligns with the weekly. So I would, on a daily basis, I would be trying to buy it down here. I'd probably be taking a little profits as long as it range trades. But the ideal here is that this thing will eventually trade to the upside. In neoclassical, we're always looking at 2 things. What's our trend, right? And what is our time frame for that trend? And then the other piece is, where do you get in, where do you get out? This is a one-sided range trade, in my opinion. And what I mean by that is I don't see anything here to tell me this thing's going to break down. Matter of fact, everything seems to suggest that eventually it's going to break higher. So you buy the lows, right, or near the lows, and you take a little off up here, but you don't short up here. Okay, there's 2-sided ranges and one-sided. This is a one-sided range. So that's Celgene. Let's look at the next one. SWN, which is Southwest Energy. This thing has been hammered. Let's look at the weekly. Okay, coming into some decent support. And coming back into a retest regen. Okay, so let's take all 3 time frames. You got a weekly retest regen here. It's coming back into it. It's within 6 bars. This is on a monthly. Right, 1, 2, 3, 4, 5. You came into it on the 6th bar. That says you can get to the bottom. Okay, so on a monthly, the ideal here, and it still could be bullish, is you could come all the way back to, what is that, 36? That's on a monthly, 36. So let's look at the weekly. And the weekly's the same. You can come into 36 on the weekly too. Doesn't change. And on the daily, there's nothing here. I mean, this thing hasn't been able to put in a swing point low. That's how steady this downtrend's been. So if you're wanting to buy it, I wouldn't buy it until you got down into this lower area. If you're wanting to short it, then you're wanting to look for a retest, regenerate that's bearish. That's on your weekly, and that's way up at 44. So this just looks like a hard trade. You know, the trades are down here and up there, and you're in the middle. I don't see anything on this chart to make it worthwhile. Let's look at a couple other ones. Toyota is another one. Okay, weeklies and monthlies. Boy, I bet this looks almost like the Japan chart. So you left volume on a weekly. Monthly doesn't look too bad. And the daily looks pretty good. Yeah, so you've got, all right, so let's see what we got here. So we got, the first thing to notice is you just got a big range going on, right? And you've been getting lower highs on this guy, right? And if this one prints, which it looks like it will print tonight, you're going to have a high here as well. So each time it breaks, right, you want to look at your retest regenerate zones on the way back, and this one's doing one right now, and it's coming right back into it. So from that perspective, you want to see it get, if you want to buy it, you want to see it get over it. The problem is right now this is just a range trade, and I don't see anything outside of this that would make me think it's any different. So that range is here, and you got two inside of it, one there, another one up here. And so it's got to get back over this high to get in the top range so to test the top. So I don't think I could do anything unless I saw it get up here, fade back, hold, and then try to do something with it. That's a hard trade. Let me go back to the weekly. So the weekly had an ABCD structure up that finished. Now you're fading back in. And you're coming back in and doing a retest, regenerate on this high. Right there. So that was the first one back. You don't have the volume. So again, this looks to me like this is going to be the spot. And you're coming back in 1, 2, 3, 4, 5, 6 after 6 bars, which is good. So the top of that, this gives us a little more information. The top of that is 115.28. And so 115.28. And now I'll go back to the daily. Yeah, so you want to try to buy the bottom of this range, which is right down into these two big bars. So I'd like to see it come right into these two bars. This is where you'd want to buy, right into those bars, these bars here, right? This area right there would be the sweet spot. And that would be a nice spot. You got decent volume here. That would expand the range a little bit, and that would be an excellent place to pick it up. And that's the way that one looks. And let's look at the last one I have. I'm going to get through them all. I'm surprised. What was the other one that was asked? I did Celgene. Oh, I think it's Tata Motors. Actually, I have two more. So Tata. So this is Indian car company. And okay, so on the monthly they broke out. They don't have the volume. They're going to come back and retest regen, which means it can get all the way to the bottom. And that's a big bar. It's 27.50 is the bottom of it. Let's look on the weekly. Yeah, the weekly is much better. I mean, it's showing you, you know, the charts are showing you, and I know you're a member, so you actually have access to this. You know, this area here, this area here, these are the two spots. So you got a wide margin of error, right? So if you buy it here, you buy a little bit, and then you do the rest down here. I think there's, you know, again, it gets back. India itself is still doing pretty well, and this has had a big run as a result of it. But you know, I think you want to try to catch that spot right there. That's the key one. If you could get it to fade into there, that'd be good. It may range trade up here for a while though, so you may not get that trade. You may have to take a little piece up here and then try to shoot for it down there if it comes back at you. And I'm going to run out of time, it looks like. The last one was another biotech, I believe, Valiant. And let's quickly scan it. So it's fading back in. Yeah, this is kind of messed up right now. I wouldn't trade it. I would short trade it if I did anything, and that would just be a short-term trade into the swing point low on retest regen, because it's going to be more than 6 bars when it gets there. So that's the trade. Well, actually, that's not true because the break was here. So anyway, I don't see a good trade in that one right off the bat on a quick scan. All right, folks, that was a whirlwind tour through a bunch of charts. I didn't know if I'd make it. I appreciate it if you send them in, though. Send in more. I'll do them each night for you. I'm LA. This is and was your daily Neo Wrap. Have yourself a great night. I'll see you back here tomorrow. We'll do it all again. Look for